It's an urgent update. I'm your host, Steve Van Metre, and thanks for joining me today in our show today. In just 24 hours, this is going to start on Monday, and because investors are completely mispositioned for what's about to happen in the stock market, this is now my most important video of the year, because this is our Sunday show, the show that makes you money, which is why we like to look at the technicals, momentum, and machine positioning every Sunday to help you make more money trading and investing. Plus, we'd like to welcome Thermobright back to the show. You might remember we featured them last week as our sponsor, and in 4 trading days, had you followed what we said, the stock is now closed up 20%, and we think it has another 50% move. Check them out on the TSXV on the symbol THRM, and on the OTCQB under the symbol TBRIF. Again, this is a stock on the move, and one that's highly incentivized by the executives to keep it up and soaring. Stay tuned at the end of the show, or check out the pinned comment or description for more information. Now let's head over to Bloomberg, where we picked today's story up, because let's go back to what happened at the recent dip, because the Goldman buyback desk was flooded with record orders during the stock swoon. And this wasn't just retail investors coming in, this was corporates coming in and buying their stock back, putting a floor underneath the market in a big way. But that's not what's coming on Monday. This has already happened, but let's take a further look, because the delusion of buybacks coincided with a market recovery, which saw the S&P 500 recoup more than half its summer losses. Companies' willingness to scoop up their own shares during market stress underscores how reliable a source of support they can be at a time when angst over economic growth and equity valuations is resurfacing. Now, keep in mind, they're buying at any price here, and they really are what's driving the markets. It's not institutional, it's not hedge funds, it's not retail, it is corporates buying their stock back. And with second quarter reporting season drawing to a close, firms are emerging from the blackout window. And judging by announced plans, their demand is set to stay buoyant. That's good news to investors big and small who took advantage of the pullback to snap up stocks on the dip. And Goldman's trading desk is a little less optimistic than Bank of America's, now predicting $960 billion in total executions for the full year. But nevertheless, this equates to a daily purchasing power of about $4.75 billion, and that's going to be coming over the next several weeks. But there's something else that's coming with it, and this is why investors are mispositioned. Some of them sold, they went to the sidelines, and now we're about to see a huge surge in the equity market. And let's take a look here, because this is from the Goldman Sachs Tactical Flow of Funds report, and this is the last bearish equity market report. This from Scott Rubner, and we're ending the worst of the equity supply and demand mismatch for August, and this is inning 8 of 9 of the correction in the baseball game terms. He says, I'm so bearish on global macro environment that I'm turning tactically bullish on equities on August 30th. And another thing we're bullish on, that is the stock for our sponsor for today's show, Thermobright. Here you can see when we featured it on our show here, this was the following day. It opened and it's closed up 20% in 5 trading days. Again, check them out on the TSXV under symbol THRM, on the OTCQB under symbol TBRIF, because we think it has another 50% upside. And let me show you why and what's going to drive the markets, because now the machines are coming back in a big way. Now, this is from last week, so I want you to see what happened coming into last week's trading. On a flat tape, there was $45 billion of global equities to sell. In an up tape, the CTAs, the machines, were still sellers here at $27 billion. But now this has changed. Let's take a look at what was released by Goldman by the end of the week. Here we see over the next week in a flat tape, $13.6 billion of global equities. If it is up 2 standard deviations, that's virtually unchanged. Even if the market goes down, the machines are buying. Now, keep in mind, Scott Rubner said he's going tactically bullish at the end of the month, but look at this. If we continue to see this over the next month and we see a large move, you're talking $21.6 billion to buy. So now you have machines coming in, and this is just the CTAs. This isn't the risk parity. This isn't the vol control strategies. They're coming back too, because here you see total exposure is actually overshot to the downside downside at a time when investors now believe we're headed into a bear market. You've got a massive buying of corporates and machines coming back. And of course, Scott notes, I think given this type of behavior and explosion in volatility, it became a trend based on algorithmic sell first, ask questions later, and now this is changing because look at this. As we see in September, the second half of September is the worst 2-week period of the year. The season have lined up remarkably well in 2024, and corporates are in the blackout window starting again on September 6th. So there is a window here, and he's waiting to the end of the month. We think the opportunity is actually right now. And let's take a look at our screens here as we look at the different positioning across the markets. And I'm going to show you just data right out of our own reports. You want to make more money in the markets, trading and investing? We show you how. You want to beat the machines? I'm going to show you how to do that as well. Let's start out with the S&P 500 here. Now, momentum turned back positive. We have the relative strength index. This is 60, and you want to see it over 40. That's how you know you're in positive momentum territory. The MACD, or moving average divergence, it still has a negative cross, but that's going to change pretty soon. Now, if you're a subscriber, I want to check this out. Let's look at Momentum Timer Pro. Now, we take all these technical signals and we aggregate them together across a 1, 3, and 6 month window, and we also look at on the daily count. So what happened then, we saw a momentum shift here, but our machine positioning, you see this report here, this is our fast algorithm on the machines, this is our slow, and we lead where the machines go. We noted to our subscribers on A12, they need to buy. They're now up 3.76%. We're going to update our stop loss levels. There was a glitch in our reporting data. We're going to get that updated by the time this video goes up. But I just want you to see how easy trading is. We give you all the signals. We tell you when to buy. We tell you where to put your stop loss. And we give you a 30-day free trial. Check out the links in the description below. And while you're there, check out Thermobright. Here we see upside target. We hit that last week. We're now targeting 565.16. Where's that? That's the all-time high. Next downside target, that is unchanged. Let's take a look at the chart here because you see nothing but blue sky higher in this chart. It's just a beautiful setup because you have now the machines coming in. You see on the economic data that retail sales report really gapped up the market. And now we note that this is going to drive stocks higher as machines come in. Corporates are still buying ahead of that blackout window. And this is really creating an opportunity at a time when investors are really nervous about the markets. And this is something important to understand because many people believe the markets are a proxy of the economy, and really corporates buying their stock back, that's just because they have extra money, and machines are just trend followers. But we beat the trend. Now let's take a look at the QQQs because we've got a bunch of great setups here for you. Let's take a look at this because back on 8/14, both our CTA and our Momentum Timer Pro triggered on the same day. We love it when that happens. That trade to our subscribers up 2.49%. Let's see this. You've got, again, RSI is trending higher, but remember, these big buybacks come from these tech companies. The MACD still got a negative cross, but not for long. We see the machine positioning has been moving up off a short position. And look at this. We see this big max sell position on our 1 month window. This is what we look for from a technical perspective, and then a change in that on the daily buy signals. Let's look at the chart here because this thing's got a bunch of upside as well, perhaps even more than the S&P because tech stocks took a big hit here, held their 200-day moving average, that's that tan line here, broke above their 6-month volume profile, that's a, or 1-year volume profile there, that is, and then have been rallying mode ever since. Let's take a deeper look here at what's going on as we move into the 10-day window. What do you see? The price of the volume profile nicely underneath there, suggesting this rally has room to run. There's the 30-day volume profile. This is an absolutely beautiful setup here. And again, this is going to be across the markets in other positions. And again, all our subscribers took advantage of this, and you can too. Let's talk about small caps here. Momentum is still negative, but we now have flagged a buy it open on Monday on our CTA. How do we do that? Well, was it max short position? Was it minus 100% of the fast algorithm, now at minus 55. We still think this has got a lot of legs, particularly because small caps will follow those large caps. You got the relative strength index, that means momentum's positive. MACD is about to cross. Upside target, we nailed that. We're now looking at 225.42. Let's take a look at the chart here for IWM, because what do you see here on the 30-day volume profile? There's way upside target there. That's what we're looking at. But let's zoom in here. 90 days, you see volume profile nicely below here. This is where buyers kept coming in. How about the 10-day window? There you've got it. Buyers right underneath looking to buy this market higher. And here you can see upside target. There's a lot of room to run here because there's not a lot of volume, trading volume, that is holding back where the sellers are at. The sellers are right up here in this 225 range. See the MACD is about to get that positive cross, just like with the NASDAQ and the S&P, setting up some upside potential. But another trade we flagged to our subscribers was banking. Now keep in mind, this is on the back of a potential Fed rate cut coming in September. We've got to buy it open on that on Monday as well. These are actual stop loss levels we give to our subscribers. Right now, we know the momentum is actually to the downside, but that's going to change pretty quick here because we see the RSI is at 56. MACD just needs to get that positive cross. Plus, we run a proprietary overlay, and that signal is likely to trigger here in the near term. Let's take a look here. What do we see? Upside potentials moving right between these supply zones. You see sellers were up here, then they drove to the supply zone. They sold down. Buyers came right back in and drove it up through this zone. Now we're looking at a return of this recent high here over the last 6 months, that is, and we think this is positive. We got the technical supporting this. Everything is behind this, and there's not a lot of volume to slow this down, particularly as the banks are buying their stock back. But how about emerging markets? This is one I don't love, but we had a trade on it because we just follow our system here. Look at this, CTA Timer Pro. I nailed this on 8/14. Actually, Momentum Timer Pro did as well. I didn't put that update. That trades up 1.88%. And yes, my friends, this is how easy it is to make money. We give you the trades, we tell you when to buy, and we give you the stop loss levels. You don't have to sit in front of your computer all day at all. But let's talk about emerging markets. We have momentum's now positive. RSI's up, MACD's up, price is up, everything you want to see. Upside target 43.78. Let's take a look at EEM here and see where this is likely headed. Right here up to this purple line. We think you're looking at potentially left shoulder, head, and right shoulder. That would be a topping patterns with a neckline right here around the 6-month volume profile. That would be very interesting if this rally here pulls everybody back into the market at a time when liquidity could dry up after that. Would be very interesting to see, but in the meantime, short-term opportunities for sure. That's why we love to use stop loss to control our risk. Let's talk about the bond market. If we turn to Metre here, we look at the 10-year, and right now their sellers under 113.76. Look at this, Friday's close 113.13. So what we're seeing here is a possible selling now by the CTAs. The market's been holding these positions up. Let's talk about TLT. This is the long bond. Momentum's still positive. Now, this is one of those trades we put on without a stop loss, and we always want to encourage you, use your stop losses. It's so important to do that. But if you don't, just follow the signals and dollar cost average in. Many people said we'd never see a positive return on this. Here we're up 3.66%. Again, just following our signals. Our cost basis on this is at 94. Friday's closing up at 97.44. All the technicals are looking good. The upside target still is in play. We haven't reached that yet. Downside target 95.29. Now, one of the risks that we see to the bond market is seasonals here are just not that great, and we typically see a sell-off through the mid of September. We haven't seen that. So my base case, I mentioned this last week, I do believe there's a likely pullback into this lower supply zone. If we zoom out, we can see that upside target on the 1-year chart of 157. We know this is a zone of sellers because we can see sellers were here, and there's a little doubt in my mind that if we see a move back up here, sellers will reemerge. If the seasonals play out, a pullback into this lower zone will set up another opportunity to get to the long bond. And keep in mind, it does very well heading into the election. So keep that in mind. Let's take a look at some other signals here that we've got on our screen. We've got gold. Now, many people, and I got this wrong. I know some of you said in the comments, oh, Steve, you don't want to buy gold at this low. So I don't like buying things that are sitting right at their all-time high, hoping they go higher. Now, if you want to buy metals, there's a whole different one that we flagged to our subscribers this week. You want to make some money if you think gold's going up, this other one's going to follow. Much better upside potential. Let's talk about gold here. Again, momentum positive, reaching new all-time highs. We don't know where this thing's going, but we do know momentum and machine positioning are fairly long on this. We see, of course, the RSI is up at 66, not an overbought. MACD, not at overbought territory either. Let's take a look here at gold real quick, because we're going to flag something else here in a moment that's even more interesting. But again, this is breaking out to all-time highs. There's some risk here. If you're trading this, control it with your stop losses. Let's talk about GDX. Now, we don't have a trade on this, but we do have a trade on some other miners for that matter. Again, check out our subscriptions for that. And what do we see here? 4 consecutive daily buy signals. Momentum's positive across the board here. Let's take a quick look at GDX. And what do we see? Upside target right now, a little above that 39.41 level. We actually have to zoom all the way out to the 5-year chart. Our target now is up here at roughly the high $39 price level. Remember, miners are not keeping up on the metal. That is a little bit of a danger sign. Let's talk about the dollar here. Momentum is negative. If the Fed cuts, this is absolutely dollar bearish. But look at this, momentum on the 1-month window is max short. Machine positioning is driving short. That is a bit of a risk for a counter trend rally in the dollar, but keep in mind the Fed is what everybody believes has control of the dollar. We know they don't, but that's what the market believes. Let's take a look at UUP here, and what we see on the 5-year chart, there it is, 28 is support. Let's zoom into the 1-year window here. You see above that 28.84 is resistance. You see a little left shoulder head, right shoulder action. This is breaking down. We believe you're going to see this somewhere right here around the low $28 range. That is the next zone of support, at least where we're flagging it at. Let's talk about what will be a potential huge opportunity. Not referring just yet to Thermobright. We think that is a huge opportunity, 50% upside potential. But first, let's talk about soybeans, because this is driving down. You want to find something to buy. I'm not saying to buy this yet. It hasn't flagged on reports, but look at this. Machine positioning, max short. Look at momentum. Max on short on the 1-month, max on the 3-month, and short downside on the 6-month window. There's going to be opportunity here, but this chart on soybeans is rather interesting. Let's pull this up, because I think at some point, I don't know when, there's going to be a massive opportunity here, because look at this. From a technical perspective, this thing broke down, and now it's about to break below the supply zone here if it doesn't hold. You're talking now soybeans down here at 19. Why that far? You said, I don't see support there, Steve. Well, we have to zoom out to the weekly chart, if you can imagine that. Here you see on the weekly chart there's support. At some point, there'll be a change in positioning here. That's one of the big reasons you want to be a subscriber. And again, why either check out Thermobright. Let's talk about them, because we believe there's huge upside potential. Again, since we featured it on our show, the stock went up and is closed up 20%. They've got some new news. Let's check them out. And remember, this is a company. The executives, and I'll show you this, are highly incentivized, not just to get the stock to go higher, but to keep it up there. All right, let's take a look. There's all the information in the pinned comment and description below. Again, on the TXV, under symbol THRM, and on the OTCQB, under symbol TB. RIF, and they're transforming innovation into wellness, and as of last week, they're transforming some brokerage accounts as well. Because Thermobright is a developer and partner in a wide range of leading-edge proprietary diagnostic and medical device technologies focused on providing customers and medical professionals with quality, innovative solutions that address some of today's most important medical and healthcare challenges. Let's take a look at some of their recent press releases. This is their latest one. Is Thermobright's AI-powered digital cough technology being considered as partner technology in new chronic cough drug clinical trial. This would be big news for the company. And here you can see they're pleased to announce this AI-powered digital cough technology, or DCT, with development partner AI for Life, is currently being considered as a partner technology for a new, innovative, disruptive chronic cough drug is U.S.-based clinical trial. And we're pleased to learn from our development partners at AI for Life that our AI-powered DCT platform is in top consideration for use in a U.S. clinical trial with a new and innovative chronic cough drug with a leading pharmaceutical brand. This from the CEO, Rob Fia. Our DCT solution and data collection platform is ideally positioned for clinical studies like this one, allowing health practitioners to make more accurate and informed clinical decisions in order to quickly address a patient's or group of patients' respiratory issues. Let's continue on, because furthermore, with the VenoWave VW5 solution awaiting final approval on permanent U.S. Centers for Medicare and Medicaid reimbursement codes. Again, this can happen at any time. The company is investigating the possibilities of AI-powered DCT platform for securing permanent CMS reimbursement code designation as well, and possibly for other federal funding or grant support. Keep in mind, again, this approval on these codes could come in at any day, and this would be big news for ThermoBright. Again, on the OTCQB under symbol TBRIF, on the TXXV under symbol THRM, because recall they expanded their in-statin investment, and in-statin is developing a novel solution using inhaled statins for the treatment and management of patients with chronic lung conditions such as asthma and chronic obstructive pulmonary disease. Prior to Therma's safe investment, ThermoBright owns 17% in in-statin, with safe investment increasing Therma's ownership in the future at a discount to the next round of financing taken on by in-statin. And check this out, Biospace News reported recently that the global asthma treatment market size is now anticipated to reach $30.1 billion by 2030, putting ThermoBright in position to take advantage of this in a huge way. And how about this market update? We talked about last time we featured them, just the big incentive ThermoBright's executives have to keep driving the price of the stock higher, putting money in your pocket and keeping the price up there. Let's take a look, because during a strategic review which aimed at evaluating and exploring a broad range of initiatives and alternatives to maximize shareholder value, including 1, continuation of as a standalone public business, 2, engagement with a strategic investor or acquisition, 3, a merger or spinoff that may involve all or part of the company's assets, or 4, other options to be discovered, and what they announced that pursuant to the company's 10% rolling stock option plan and in compliance with the policies of TSXV, it is granted incentive stock options to certain directors, officers, consultants of the companies to purchase up to an aggregate of over 5 million common shares of the company, with options exercisable for a period of 3 years at a price of 5 cents per share. Again, this is their incentive to keep the price up and, again, put money in your pocket. Let's take a look at the chart here, because what we see, it came down here into this lower supply zone. Buyers stepped in on some news, drove the stock up into this zone here. It pulled back. We flagged it here on our show. We said this is where you want to buy. Get in. The train's leaving the station. It rallied up, closed up 20%. It's pulled back a little bit into the zone, and we think it's going to shoot higher, up by 50% into this upper supply zone. And as we zoom in, you can see this very clearly. The buyers were putting support underneath the stock. It moved higher, and now it's moving up a second time. We believe tremendous upside potential, and you can hear it just seeing it ran into resistance here, but a breakthrough of that 7-cent level sets it up to move upwards to the 9 to 10 cent level, putting a potential 50% return in your pocket. But as always, with any company we feature on our show, you're under no obligation to purchase their stock. Be sure to do your own research before placing any trades. And with that, I'm Steve Van Metre. Thanks for watching. Thanks for being fans. Bye now.